So how do you see that the way the central banks are going and buying gold? Do you expect this trend to continue?
US dollar has remained like the core of the financial global system, I'll say. But in 2022, there was one thing that happened. That was the
Bitcoin is also like a alternate currency, a store of value, like gold. Same way we talk about gold and dollar. Like even how do you value dollar, right? I mean, this is because of the demand. What are your thoughts on Bitcoin and vis-a-vis gold?
So when you're taking Bitcoin, you are mostly taking exposure to digital assets or decentralized financial systems. When you're taking bet in a commodity like gold, you are betting in a commodity that has been a time-tested asset, right? Gold is not something that has.
We have seen that the silver demand is also really peaking and it is, I think, outpacing the supply.
Right.
What are your thoughts on that front of it?
When you see silver, it has been in a deficit versus like for the past 5 years. And even if we see the current anticipations,
So one myth about gold that investors commonly believe.
that gold is
Hello and welcome to Ventura Spotlight, where we bring you conversations with experts shaping the way India invests. In this episode, we are pleased to have with us Akshay Udeshi, fund manager at Mirae Asset Mutual Fund. Akshay holds a MBA in finance and a BE in electronics and has experience across financial services and product development. Prior to joining Mirae Asset in 2021, he worked with Reliance Retail and L&T Financial Services, where he was involved in product development and product management. At Mirae Asset Mutual Fund, he manages a range of ETFs and index-based strategies spanning domestic, thematic, and global indices. His work involves closely tracking global markets and asset allocation trends, which makes him well placed to discuss evolving role of precious metals like gold and silver in investors' portfolios today. So let's get started. Hello, Akshay, and welcome to Ventura Spotlight. It's a pleasure that you have been able to take time out for this session.
Thank you, Joseph. Thank you, all of you, for having me at the show. It's going to be a good conversation, I believe, today.
So, some time back we did a session on gold and silver, but I think from that time, and unfortunately, the time has not been very long. But we have seen that silver has crashed by nearly 25-30% in just one or two sessions, and there is a lot of anxiety among people. I think we are seeing one of the biggest wars of our time, and the whole geopolitical situation is also completely everybody's on tenterhooks. We don't know what is going to happen. So when we look at it from that perspective, and when we look at the geopolitical scenario which is currently going on, and generally it has been also said that gold is like a safe haven when the world is in turmoil. But currently, when we see the gold prices have not reacted because they've all reacted in the past. So how do you see gold as a structural asset, and what is your view in the current scenario?
So the very first thing that I remember, so on, I think it was March 1st when the West Asia attacks began. And I remember my friend telling me, "Oh, Akshay, now you see gold prices are going to rally." And you see every news channel now and then, you will say that now there are geopolitical tensions. There is a big war that's going to take place. So gold is going to skyrocket. But I think that didn't actually happen. And there were multiple factors that have been in play, I'll say. So traditionally, whenever there is sanctions, tariffs, or geopolitical uncertainty, people have resorted to gold as a financial shelter. But right now, there are many dynamics that have been playing out. So the biggest reason that, according to me right now, is strong US dollar movement. So if you see right now, USD is rallying. And as like in economics, they say gold and dollar, they tend to have an opposite relation. So if you see right now, if there's the purchases that are happening for gold, they are going to be at a higher price. So if I'm an investor for India, let's say earlier dollar was roughly at 89, now it's at 93. So I have to shell out more dollars for the same amount of gold. So USD strengthening is one big reason why gold is not rallying that much. The second major reason, since there is so much uncertainty, central banks all over are now thinking of having a more stricter monetary policy stance. At the same time, there was anticipation of rate cuts, lesser interest rate. That's again a positive for gold. But since there is such a tighter monetary stance that is expected to happen, this has again negatively impacted gold. The third thing, so we saw a multi-year rally in gold and silver. So and equities have been sluggish during that patch. So investors did some kind of profit booking as well during this kind of time. So typically when market goes down, you want to capture those assets at discounted prices. So you tend to sell those assets which are at good profits or something. So there is, I believe, there is some amount of profit taking that has also played in. And then there are other geopolitical factors like there is crude as the alternative commodity asset that's also right now in more talks than gold and silver.
Correct.
So like when we combine all these factors, I think that has been dragging gold and silver both for a while now since the war has started.
Okay. So, in your view, I mean, there was an interesting thing what you mentioned that the interest rates are now not expected to come down because the oil has also spiked up, and there's going to be a concern on inflation. So, how should an investor, look at gold as a part of his portfolio from a long-term perspective? We are talking now as an asset class. So, how should an investor look at it?
So see, I state this example many a times that when you're looking at gold, you have to treat it as insurance. Like, so we all take car insurance, a lot of other type of insurance, but our goal is not to use it, right? So gold is that type of insurance in your financial portfolio. So whenever markets tend to correct, you always, not always, I'll say, you often see that gold tends to be stable around those levels. So we have seen many years in the past, like let it be the global financial crisis in 2008. Let it be, if we talk about a year like COVID-19, we saw gold rallying. Let it be 2025, equities were sluggish. Then we saw the Russia-Ukraine war when gold delivered a staggering return. So gold tries to offer you that safe haven status. It tries to protect your portfolio from the downside risk. So I believe from an asset allocation perspective, every investor needs to have some kind of allocation to gold, whether it's by gold ETF or multi-asset funds or physical gold, because having a multi-asset portfolio and having a diversified approach helps you to, navigate those market cycles when your some asset class may deliver sluggish returns and some may deliver better returns. Just imagine an investor who had no allocation in gold and silver from 2022 to 2024, like he has missed a big rally, right?
Correct.
So I believe from a portfolio perspective, you always need to have a good amount, like I'll not say good, a decent amount of allocation to different asset classes.
But gold as an asset class, and it should not be as a jewelry, right? That it becomes more of a consumption. So I think interesting. I think that, and I agree that it actually should be a part of the asset class, and to at least stabilize your portfolio.
Very true.
But off late we have seen the rally has been pretty much quite crazy. If we talk about even gold and silver, I'll talk about gold first. We have seen that there is also a talk which is going on about de-dollarisation that is also happening, and we have seen that across the world, the central banks have been one of the biggest buyers, right? And they are the ones who are able to move the price needle. It's not the individuals or so and so. So how do you see that the way the central banks are going and buying gold? Do you expect this trend to continue, and what are the cues you get from that?
So I have a very interesting story, I'll say. So for the past 80, 90 years, if you say, US dollar has remained the dominant currency for whether it be trades, whether it be oil trades, whether it be USD treasuries. You see any central bank in the world, they will always talk about USD assets, FX reserves. And then at the other side, you will be seeing all the SWIFT payments across the world. They are happening in US dollar. So US dollar has remained like the core of the financial global system, I'll say. But in 2022, there was one thing that happened. That was the Russia-Ukraine war. And at that instance, I remember the European nations and US had frozen close to $300 billion worth of Russian
Correct.
FX reserves. And I think that's a big turning point when people saw that now FX reserves are more of a political asset than actual reserves. And that is one time we saw many countries, they started diversifying away from US dollars. So whether it be countries like China, Russia, Middle East, whether it be smaller countries like Poland or Kazakhstan. So you see there is a good amount of central bank buying that has been taking place. Recently, even South Korea joined the club for the central bank. And over the time, I believe that there is going to be more amount of buying that is going to take place because countries are now are looking to diversify away from dollars. Just let me quote a number over here. If I talk about India, in December 23, our FX reserves were just around 7.5% of our total FX kitty. Just jump to Feb 2026, that number is roughly 17%. So you see
Oh,
that the Indian government is also specifically, buying more. It's increasing, it's more like increasing more on gold and trying to diversify away from USD. And lastly, there is one big factor, that is trust. So let's say if I go to Europe and buy a European bond, or if I go to US and buy a US treasury, what am I taking? I'm buying a bond based on US trust or European trust. But when you're buying gold, the trust is in the commodity itself. So I'm not taking any country risk per se. So that is one more big reason why central banks have been steady buyers in these past years. And just let me again, if I talk about numbers from 2022 to 2025, there has been record amount of buying by central banks, and that has been one important driver in driving the like historical levels.
you also mentioned that the dollar, which is strengthened from 89 to 93, and we are also seeing that now there can be a pressure on interest rates to go upward. So amongst with these two scenarios, and we have already seen a lot of things already reacting. So where do you see? Do you see that the dollar and interest rates can have a much more larger impact on the gold prices going forward? Like if we have to look at it, 1 year, 2 years down the line, what's your thoughts on that?
So if we talk about the conventional, I'll go with interest rates first. If we talk about the conventional relationship between, let's say, USD or the interest rate, the gold and the interest rate, what happens? Let's say gold is an asset that's non-yielding. It's not going to give you any fixed cash flows as your FD or your bonds, right? So whenever your fixed income interest rates are rising up, so you will be more interested in buying those bonds. So let's say if FD rates are at 6.5 today, if they jump
Correct.
to 12, you'll be very enticed to go
Correct.
and buy those FDs, right?
Correct.
Even equity offers or gold offers a better return profile because you are taking less amount of risk and you're getting a good amount of return for that, for the risk that you're taking. So generally, whenever there is a tighter monetary stance, or let's say whenever interest rates rises, it's a negative for the gold. And whenever on the vice versa side, if we see whenever there is lesser interest rates, it's treated as a non-yielding asset. So if interest rates are less, you're not going to park in your money in a 3% FD, right? You will say, no, I'll go and look out for better opportunities. I can buy gold and generate that amount of return within this much time or something, or buy a stock or a ETF in that particular span. So interest rates overall would have an inverse relationship with gold, I'll say. On the other side, if we see the factors that are in play, as I said previously, there were interest rate cuts anticipated earlier. Now, in such a tighter monetary, like in such a geopolitical complex world, interest rate cuts might be a bit delayed. And countries all over the world, they are now looking to curb inflation, right? The crude oil prices is going to hit your daily purchasing power. So countries all over the world or central banks all over the world may now look to have a more tighter monetary stance to control inflation. So that's one negative, or like you can say one factor that's going to affect the gold prices. On the other side, if we talk about dollar, so as we spoke in the earlier part, that USD is rising, right? I'm an investor for India. I'm going to have to shell out more dollars to buy the same amount of gold. So generally, any positive movement in the dollar that acts as a inverse for my gold. And just be if I talk about some data in 2022 when gold was as it's at its I think at 4 or 5 year low, at time dollar was at its top. So you can see that inverse relationship is actually going to play out. And
Okay.
right now investors, they are preferring USD assets. They are parking their money in US treasuries. So
Okay.
overall, these factors can have some kind of impact in the coming time for both these commodities.
You also mentioned that as a part of a strategic allocation, it is more like taking an insurance
Right.
against your portfolio. Do you see gold as a tactical play for investors also? Do you think that there is a scope for someone to play that rally, as I may just put it across for a better word, that since we know that the central banks are buying, and because the central banks are buying, there'll be buoyancy of demand and the prices can go up. So do you think that there is any tactical play left, or you feel that it's not much?
See, when you think from an allocation perspective, yes, as an investor, you are okay for a strategic call as well as tactical call. Let's say an investor may have been bullish in gold on silver for a longer time. So they would have, let's say, have had a more allocation. So you can have some part of your gold allocation as a strategic one and some part as a tactical one. Because last year, if as I said, someone who may have not invested of gold has missed on something. So if an investor wants to take a tactical allocation based on the levels that he's confident, yes, he can take one, since there is uncertainty and multiple complex geopolitical factors that are playing right now. They can take a tactical call. That's completely up to them. But I always say that don't try to time the markets. See, timing equities is very different. When you value a equity company, you are valuing based on certain cash flows, that yes, a company is going to generate so much profit. How do you value gold? You
Correct.
actually like don't have any cash flows, right, to really determine what's the valuation. So I believe when you try to time the market in those sort of things, it becomes complex. You should look at as a strategic diversifier. And I tell all my investors that if you are not having some kind of allocation to gold, just have it. If you want to play it tactically, you are open to play that, but just be confident of the levels.
Okay.
Like compared to silver, I still feel that gold is a much safer play, because
Correct.
silver has witnessed like quite volatile
Right.
up cycles and down cycles in the past periods.
So when we said that it is, I also wonder that how you value gold, right?
Right.
And the same question also keeps on coming up for bitcoins, right?
Right.
And that another hot topic, which is always keeps on going on. And I think as a matter of disclosure, I'll also state that that in India it is still not it's not very clear whether you can invest in bitcoins and how to do that.
Right.
So it is only an academic interest where we look at. So they now most at least globally they are talking that Bitcoin is also like a alternate currency, a store of value, like gold, right? In the same way we talk about gold and dollar, like even how do you value dollar, right? I mean, it's because of the demand, right? So what are your thoughts on Bitcoin and vis-a-vis gold? So it would be interesting to have your view.
So I think that comes from the very interesting thing that you said. It's an alternate to your fiat currencies, right? Both are treated as stores of values. And I remember my younger brother who was like, "Oh, I'm investing in the future, like a digital asset." But what investors need to really understand that both are very different, right? So let's take Bitcoin for case. So when you're taking Bitcoin, you are mostly taking exposure to digital assets or decentralized financial systems. When you're taking bet in a commodity like gold, you are betting in a commodity that has been a time tested asset, right? Gold is not something that has just come 10 years or 12 years back. It's been since ages. And before that, it was before the 90, like it was 1970s, 80s, when any money that was printed in the world used to be backed by gold. So
Correct.
gold has actually held that reserve currency status for quite a while. And at the same time, when we compare Bitcoin, Bitcoin is a relatively new concept. It's very popular among younger investors, I'll say. But what we need to understand, it's still developing. It's going to take time to mature, to develop, where there is maturity in the market. Then there may be a time to say that, yeah, Bitcoin is some kind of asset that some investor needs to look at.
Okay.
But if we look at gold, gold is very different. The second thing is the risk profile. Just if I talk again about numbers, so Bitcoin has corrected roughly 40% from its top. When did you see gold correcting 40% from the top, right? That's never happened.
Correct.
So Bitcoin as an asset, it's highly volatile. On the contrary, gold, it's relatively safer, I'll say. So what we need to look at, that there may be times when the Bitcoin market gets matured, and then you may look at a allocation. But at the other side, if you see gold is mature, you can surely park in your money in an asset that is next best to equity and debt.
You say that Bitcoin is created like a fiat currency of gold, but it actually has got a volatility of silver.
Yeah, that's very correct, I'll say.
So, now moving to the next, one of the other topics which we wanted to, take your, views on is that, silver, and it has been, a very hot topic across everywhere. So how should investors, look at silver as a part of the portfolio? And like as we know that now we have ETFs available. Otherwise, previously the only way was physical, and it is very difficult to store that. And the other one was only through the MCX in futures as a basis, which was not very. It's not an investment then, right? It could be more of a speculation. So now since we have got silver ETFs, how should an investor take a view on silver as a part of his portfolio?
So commodities as such, I'll say, so whenever you are having your meal in the night, right, you have rice, you have chapati, you have dal, you have protein, carb, everything, right? So whenever you're building a multi-asset portfolio, you need to have all kind of asset classes, I'll say. You have equities on one side, you need to have fixed income, you need to have international exposure. At the same time, you need to have commodity exposures. And commodity exposures, the first that we discussed a lot, gold is definitely something that needs to be there in an investor's portfolio. The second one, silver, I think it's having dual characteristics. The very first character is the precious metal tax. It has a performance that is very different from like traditional assets. It has a negative correlation with equities and bonds for quite a long period. And the second thing, it's an industrial metal. So it is having application in new age industries like EVs, power grids, solar panels. So you get, and you're taking exposure to a precious metal. At the same time, it's having good amount of properties. And when I talk about EV solar panels, like pick out any person in the world, they'll say, yeah, they are the future. So silver also needs to have like some kind of allocation. But again, like if I had to give you the numbers, it should be lesser than gold. Gold should be the dominant part within your commodity portfolio. Frankly, in India, the only exposure through commodities that we are getting is just through like gold and silver. So gold should be more part of, but yes, silver is also one commodity that even a small amount of allocation should be there, like because it's important when you see the market rallying, that part of the portfolio would also like just if you compare a simple portfolio, 90 equity and 10 commodities, and let's say if it was 5 was gold, 5 and silver versus 100 equity, see the difference between the past 3 years.
Correct.
For 2025, silver had returned close to I think 160% return.
Correct.
Like that's staggering returns, right? So I believe have allocation, but don't be overexposed at this levels, I will say.
So like, you very rightly mentioned that, silver is also a industrial commodity. as well as it is also got a it's like poor man's gold, as we
Yeah.
used to call it, right? So since and a lot of demand was also is also emerging from India and China.
Right.
And what I heard was a very interesting talk by the the CEO of the Silver Institute. He says that India's demand is more of the ETFs and
Mm.
investment demand,
Mm.
and China is more of industrial demand, right?
Right.
So and that is the fact that China is more into the EVs and the solar and adopting the new age, right? And we have seen that the silver demand is also really peaking,
Mm.
and it is, I think, outpacing the supply.
Right.
So what are your thoughts on that front of it? Means any of your thoughts which we can have for our viewers?
Surely. So when you see silver, it has been in a deficit versus like for the past 5 years. Like 5 calendar years is a very big number, I'll say. And even if we see the current anticipations, silver has a scarcity. There is a supply shortage even in the coming time. And at the same time, the industries that are using silvers have been increasing. Like let me name two specific industries. The first is EVs. So for average electric vehicle consumes roughly 25 to 50 grams of silver in one battery component. At the same time, you have the premium cars that have consumption as high as 50 to 100 grams.
Okay.
So you know that EVs being the future, and it is anticipated in the coming time, the more premium segment EVs may have more requirements for silver. The second big factor that's driving the industrial demand for silver is solar panels. Again, as solar panels, an average solar panel will roughly take 10 to 20 grams of silver. And we, like even in India, we always say that we want to diversify from crude. You see how we are now focusing more on renewable grids, renewable energy, clean energy sources. So again, that's a positive tailwind for silver in the coming time. And then there are some other applications within semiconductors and other electronics. So all these parameters combined with the supply demand mismatch, it's acting positive for silver. And at the same time, you said a very thing correct, like a very correct thing, that in India the demand is more from an investment perspective, because the EV market and the solar panel market, it's not as mature as China. In China, the EVs roughly account for 50 to 55% of the total fleet. So the consumption of silver in China versus India, it's very different. But right now, the supply shortage tends to be there. And there are some more things that are already in place. Like China is also pulling off the rebate on solar panels effective from April 1, 2026. So right now there are many solar companies that have been overstocking silver. So that's why you see silver after Jan 2020, Jan 28, 26 has been volatile to another extent, I'll say. On one day you will be seeing a 8% up move, another day you are seeing a 4% down move, and that's one of the reasons. And then over the top you have market volatility that is adding to it. You had speculative, like when you see silver rallying, there was a lot of speculation always that was adding up to it. So
Okay.
all these factors are like laying out a very complex picture for silver right now, I'll say.
Okay. But you expect the silver demand to be quite buoyant? Uh,
S- uh, as I said, right now companies are overstocking.
okay.
Like the biggest trend that's happening in China, because China is one place that you need to look from a consumption point of view,
Okay.
given their strong play on solar panels and
Okay.
EV.
Okay. 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 Since you handle, mainly the commodities fund and all that, do you see that any other commodities also making its way into the ETF market? I'm basically talking about copper, because that's another
Yeah.
commodity which is very there, and then you
Mm.
have rare earth metals like
Right.
uranium, you have platinum, palladium. Do you see that happening in India investment landscape?
So when we talk at a global level, you have options to take right from base energy metals,
Hmm.
base metal, as you said, rare earth metals,
Ah.
agriculture, etc. But when we say from an India point of view, SEBI as of now has just approved gold and silver ETFs. And why also they have approved, I'll say, because there is a proper domestic pricing mechanism in place. So whenever SEBI may approve something, they will look on many practical considerations that come into play. The very first thing is storage cost. Like, is there proper amount of storage? So storing gold and silver is far more, I'll say, easier than storing copper. So copper as a metal, it's very bulky in nature. So there are some warehousing challenges that are right now in place.
Okay.
So still those things are not sorted out. There is a lesser chance in the near term, I'll say. And at the same time, there is no proper pricing mechanism from a regulatory level. So let's say if I want to know what's the, let's say for a person who doesn't track financial markets, he wants to know what's the price of gold and silver. He can easily go to a jeweler or
Correct.
someone and just know what's the price of both these commodities. But just go and tell him that go and find the price of copper. It's going to be a very difficult job for him. So right now, there's no proper pricing mechanism that is in place. So that's one thing. That's the reason why I feel that the regulator is not allowing those commodities. But at the same time, SEBI, as SEBI knows that as the investor depth increases, we never expected silver ETFs to come out, right?
Correct.
You may see that in the near term, once there is a proper mechanism at a regulatory level and at a market level, and also, as I say, at a storage point of view, you may see ETFs in the in the coming future, I'll say.
Okay. Good. I think we should wait for that.
Surely.
Right. So since you mentioned about the valuation and the transparency and
Yes.
price discovery, everything. So SEBI recently also came out with some guideline with regard to the pricing of the ETFs. There was some mismatch and all that. So
Yes.
can you throw some light on that?
So, SEBI recently updated their guidelines for valuing gold and silver ETFs. So, these come in effective from April of 1st this year. So, what's updated, I'll tell you. So, earlier, let's say if I had to price my gold, okay, it was done using international benchmark prices. That's LBMA, London Bullion Market Association. Then I have to adjust it for currency conversion, transportation costs, custom duty. Then I add a premium discount factor versus my domestic market prices. So there was a benchmark price that was computed different by every AMC in the market. So let's say if you buy an X ETF and I buy a Y ETF from a different AMCs, our performances were very different. Our benchmark tracking was different. So that's the reason SEBI told them now they have come out with a framework where these benchmark prices would be published by recognized Indian stock exchanges. And the best part about that is that these prices are going to be determined by a polling mechanism. So mutual funds in all would have that polling thing that would be done at every day, and that would have a benchmark price that is accepted by the whole market rather than each AMC computing their own benchmark price. So I think this is a very good move. It enhances transparency, it eases the valuation, and investors may now know that the ETF that they are tracking, is it really tracking the benchmark or not?
Okay, so I think
That's I think very good move, I'll say.
So now means we also find that a lot of nearly each and every fund has got an ETF, right? And the price varies for each and every ETF, right? So now, if a layman investor, ultimately the underlying asset is a common asset, right? It is gold or silver. The price of gold, the price of silver.
Right.
So from an investor perspective, does it mean that now 1 gram of gold is whatever is the equivalent price?
Right.
So now will the pricing will also not be different? Is that what you're trying to say?
From an investor perspective, what would happen? I'll say that it's going to remain same for us. Like there's nothing that is going to change at a transaction level. It's going to be the same. You go on NSE or buy the respective gold or silver ETF. What changes is at the benchmark level. So as I said, each AMC had to publish their own benchmark rate. So let's say X AMC publishes that this is my benchmark and I am delivering so much return. AMC Y says I'm delivering, my ETF has delivered this with respect to the benchmark. But the main problem comes, the benchmarks are computed by a different method. So there is no, it's not apple to apple comparison, I'll say. But now with this framework coming in, I'll say this is a very good move, and this may this may bring in more transparency. I'll also like to say one more thing at this time. Whenever investors are transacting in these ETFs, they should look at one thing while transacting, that is the INAV. Now, INAV stands for the intraday net asset value. So anytime you're going on the exchange and looking to buy a gold or silver ETF, just check the INAV on the AMC website. Check the value that is quoted on the exchange, whether it's actually matching the underlying price quoted by the AMC. So this will help you to procure the asset at the right price. That's one thing I believe each and every commodity or like even equity investors should follow.
Yeah, I think that's a good thing. And just I'm clarifying for the investors that this INAV is available on the website
Yes.
of each and every AMC against that ETF, right? And the price is updated in what frequency? Is it live or is it?
So there is a mandate of updating in like frequencies that can be decided by the AMC every 2 hours. But in case of like if I talk about my AMC, we update it every 15 minutes.
Okay.
So it's
So
quite
there's a 15-minute lag, which a person
Yeah.
gets a reasonably good idea in terms of the price.
So you like
I think
and
that's fair.
That's fair, and I believe during volatile market situations we update it very frequently.
Okay.
So that investor gets a more better price because gold and silver has been so volatile.
Right,
so
right.
That's the thing.
I
that
think
we
that's
did.
it's a good way to keep a track of what is the difference in the price.
Yes.
Okay. So now we there's always a debate between ETF and fund of funds, right?
Right.
And you have been one of the early ones in terms of having a gold and silver ETF, which becomes a combo product, right?
Right.
The ETF is more tax efficient because it is more than 1 year. It is
Yes.
long term, and less than 1 year it is short term. For a fund of fund, the period becomes 2 years, right? So even for us to advise, we always have been advising that you should invest in an ETF
Yes.
vis-a-vis a fund of fund.
Yes.
But now when it comes to gold and silver as a combo, that makes it a little tricky because whenever if a mutual fund does a transaction in gold and silver, it is a tax free. But if an investor tries to maintain that ratio between gold and silver, he'll keep on doing and he'll keep on paying tax, and he may lose the entire return in that. So the product is very interesting. So we would actually like to hear it from you that how should an investor look at a gold and silver fund as an investment point of view?
So I think gold and silver allocator is one of a very good product when you should look at commodities. So investors often tend to get confused when to buy gold, when to buy silver. I feel for investors who are not much aware, like who are not very sure when to allocate, I feel and gold to silver fund of fund does the job pretty well. Instead of you taking the allocation calls, you deciding and checking all the variables like central bank buying, geopolitical tensions, industrial demand, supply demand gap, it's better let the numbers and the allocation model behind the whole fund of fund let it do the job, because it may allocate based on the current market scenario. You can't every now and then rebalance your portfolio. Even if you are a very strong market follower, it gets very difficult to balance this allocation. So I believe a fund of fund, like it will like evaluate multiple parameters, check the geopolitical or macro variables, and then allocate on what's been the historical trend or what is more prevailing in the coming time. So I think a fund of fund approach is going to be better. And as you rightly said, like instead of having two different ETFs and taking their tax incidents separately, the fund of fund would offer you a route that is more tax efficient, even for investors who like are looking to take a SIP. So I feel that the SIP is much better in a gold silver fund of fund for those investors who want both commodity
Both
exposure.
combination, correct.
For investors who just want gold, a fund of fund, you have the gold fund of fund as well. But for investors who want to bet on both these commodities, I feel a tax efficient route, allocation driven route, and a structured approach helps you to navigate those market cycles pretty well.
Okay, good. And the precious metals, they follow a lot of this macro indicators and all that.
Right.
Are there any other indicators you feel that the investors should keep always a watch out for for them to see how the gold and silver would react?
So I feel if an investor has to track both these commodities, there are some certain factors that he needs to always look at. So when I talk about gold, the biggest factor right now is central bank buying. So always check central bank buying because it has a great influence on pricing of gold. The second is jewelry that we have not spoken about is India and China are two big markets, and here jewelry is of more cultural significance, right? So jewelry is one place where demand tends to be there. So you need to observe the jewelry trends to actually gauge what's going to be the like demand trends in the coming time, or how it's going to affect gold prices in the near term or short or the longer term. Then there are macro factors that we discuss. Interest rates, always see whether it's a tighter monetary stance or a easy monetary stance. Then there is US dollar that you have to stock. And in addition to that, when you are tracking silver, there is the supply demand data that one needs to look at. Also, to say that silver is a metal that's not easy to mine. So even if I want, there is demand, I can't just increase my supply. It's going to take time to mine, and so always have a look at supply demand parameters. And then there is industrial demand that's coming from these. So any positive increase in demand for solar panels and EV, it's going to have a positive impact on silver. But again, the prices are as I said, geopolitical uncertainty is one thing that no one knew that the war would come.
Correct.
Right? So geopolitical thing is one thing, and investment demand is also something that investors can't track. But on a totality level, I'll say that gold and silver are both a complex mix of these 6 to 8 factors.
So, since you deal in, the markets which are not just 9 to 3:30, I mean, there is silver and gold prices are determined world over, so nearly 24/7, determined by factors which are in no control of you.
Right.
I mean, more to do with you. So what the US is going to do tomorrow, nobody knows, right? So you have a war situation, you have a geopolitical situation. So amongst all this chaos, how do you manage the sanity of yourself at the end of the day?
I sometimes completely shut off, I'll say. Like, see, there's so much data to look at. So you get confused, right? Like what to evaluate. So at the end of the day, I just follow my routine. I do observe the markets. That's one thing that I can't refrain from doing it. But at times I just follow a proper routine. I'll just have a quick glimpse at the markets, see what's developing, and then we decide on what allocation or what changes we need to do. But we still keep our sanity, just keep ourselves from away from away from markets for some time.
How
I'll
do you
say.
unwind?
So I sometimes likes to watch movies,
Okay.
to travel. So that's one unwinding factor.
Okay.
So that pretty works for me, I'll say.
So thanks. We will have a rapid fire. We do
Sure.
that with our fund managers. So we'd like to do it with you too.
Yeah.
So one myth about gold that investors commonly believe.
That gold is going to deliver equity-like returns.
Okay. One reason gold often disappoints investors in the short term.
When they track too much data, I'll say. Like when you see numbers like inflation, you'll see the inflation is rising, it's going to impact. So
Okay. Your investing style as a Bollywood film title.
Laksh, gold and disciplined, I'll say.
Acha,
Goal-oriented
okay.
and disciplined.
Okay. What do you usually say to about precious metals in your family WhatsApp group?
Diversification.
Gold or silver? Which tests investor patience more?
I'll say both at different market, but have allocation in both, I'll say.
Okay. One macro variable investors often overreact to most.
I'll say again, it's inflation data.
Inflation data.
It's like they will just observe the numbers that inflation has increased. And
So that brings to my next question. Inflation fears or currency weakness? Which matters more for gold?
I'll say currency weakness is more to choose between the factors, I'll say.
Okay. So thank you, Akshay. It was a pleasure having you, and I am sure that our investors will get a much more better insight into gold and silver. So thank you very much.
Thank you, sir. You have been a very good host, I'll say.
Thank you.
Thank you.
Thanks for tuning in. If you enjoyed this video, hit the like button and subscribe for more content that makes your financial journey smarter with Ventura. Mutual fund investments are subject to market risk. Read all scheme related documents carefully